2 o'clock hour, but first time to get back into the markets. That is a big question for a lot of folks out there with cash. Here to help with their picks on where you should look to invest, Keith Springer. He is president of Capital Financial Advisory Services, and Jim Lowell, Fidelity Investor Editor-in-Chief. Good to see you both. Keith, first to the bailout package. Do you care if one is passed this weekend?
Well, of course I care. I think it's imperative that one get passed. I think we all know it. What we're up against is a little political wrangling. Everybody's going home to lobby for the election coming up. They all want to have a little bit of media exposure. They want to have something to show on their local TV news stations. But ultimately, I'd be really surprised if it's not passed by Sunday evening in time for Asia to open.
Keith said we all know it. 60% of the American public, according to the Rasmussen poll, don't want a bailout. So what are they going to do, and how will it affect the markets?
Well, I think we'll get a deal done, no question about it. The bailout and the fix will be at least attempted to get put in place as early as I would think midnight tonight. The markets will basically be able to digest and possibly rally on that news on Monday. But I think the reality then will quickly sink in that this is an economy that's in recession. The global economies are slowing down. Ireland, the first country in the European community to go into technical recession. In Europe, New Zealand, and Asia, we are staring some very difficult market times right in the face, bailout or no. And so it behooves investors to not tune out. They need to tune into their portfolios, make sure that their portfolios are allocated to account for the fact that we're going to be fighting a recession headwind for likely the next quarter or two in the markets, no matter what size the bailout is and no matter whether or not the bailout in fact works.
All right, but Keith, on Monday, when we see all this market activity, where should we go in and where should we step back and say not yet?
Well, I think at this point, what you've got to look at, the one and most important thing out there is nobody is positive on Wall Street. You can't find a bull eye on Wall Street to save your life. And everybody thinks the market's going down. Well, when the market never happens, when everybody thinks the same thing is going to happen. There's an old saying, if it's obvious, it's obviously wrong. I'm scared too, but I think you've got to start stepping into this market. You can buy the financials, probably with XLF, with the ETFs. You buy the utilities, and I think technology is still very attractive.
Technology, the 4 Qs. You're going for the 4 Qs now.
I think the 4 Qs are a great way to go. Yeah. Corporations still have to be competitive. They've got to invest to be competitive long term. People still love their toys. You've got to, I think technology, the 4 Qs is the best way to play.
Jim, I'm sorry to do this, but we got 10 seconds. Can you give your best pick for Monday?
I would go with Vanguard, small cap growth, healthcare, industrials, technologies, all found inside that instrument. It's a great way to build through a recession towards better growth ahead.
You're great. Jim Lowell, Keith Springer, thanks to both. On almost any other day, the biggest bank failure in U.S. history would have been the top of the news. Not so, but we've got it covered next.